Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is June 5th. We are going to take a look at a company out of the consumer staple sector, Nestle. This is actually a company out of Switzerland. They do have a footprint all around the world. You're probably familiar with the Nestle candy bars. They do a lot more than that. And this is a suggestion from a subscriber. Caden Brooks commented on the GSK video, GlaxoSmithKline video we did, which is a biopharmaceutical company we did yesterday. Or maybe it was the day before. We did Bristol Myers Squibb yesterday. So a couple days ago, I found your channel via your video covering NOC. Can you do a segment either on RTX or NSRGY? And that's what this one is. That's the ticker, NSRGY, Nestle. I enjoy your content and think you have decent insight. Nice channel to have found. I do appreciate that, Kaden. Thank you for the compliment there, and we will take a look at Nestle. So let's jump right in here. Before we get too far into the video, if you would take a moment to hit the thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the videos. We do this Stock Pick of the Day series Monday through Thursday on a company that's pulled back. I do these subscriber suggestions. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below and I'll try to work it in. I'm not going to guarantee I get to it within the first couple of days. This one just happened to work out that way. Nestle pulled back today, so I didn't have anything else on the docket. Thought I'd cover it. Let's jump back into the video. This is the Vested Interest Stock Screener. This is how I look at a company on a high level. We are going to run through this criteria here. At the end of the video, we will see if it meets 5 of 8 or 6 of 9. We won't look at price to book on this one. It's not a financial company. I really focus on price to book for banks and other financial companies. You can use price to book for any company. Just make sure if you are using it for like Nestle, you compare it to other companies in the same sector. So you compare Nestle to maybe like Hershey company. That would be a similar comparison there. And then you'd look at their price to book and compare Nestle's price to book to it. For banks, it's real simple. 1 being fair value, anything under 1 being overvalued, or undervalued, anything over 1 being overvalued. But for other companies, their price to book might fluctuate a little bit more. Above 1, you could have a price to book of 3 or 4, for example, and that be fair value or even undervalued, depending on the sector that the company is in. So price to book for banks, this one down here is 1, but for other companies, you want to compare it to other sectors. Hopefully that made sense. And taking a look, if you want to know more about this company, check them out at www.nestle.com. That's www.nestle.com. That is their homepage where I pulled this information from. And again, they are out of the consumer staple sector. They have their hands in a lot of different things you can see here. I didn't pull up all their brands because they have a bunch of them, but I did pull up what their brands are kind of in different sectors here in the consumer staple sector. Baby foods, cereals, chocolate, and confectionery. So that's probably, again, how you know them best. For their candy bars, coffee, culinary, chilled and frozen food, dairy, drinks, food service, healthcare, nutrition, ice cream, pet care, water. You might know them from their water as well. I see some of their Nestle bottled water whenever I go into the stores. Plant-based portfolio, so they're even jumping into the plant-based stuff and recipes. I'm not sure if they sell their recipes to other companies or what exactly that is, but if you were to go to their homepage, you could click on these and see all the different brands that fall underneath of Nestle's overall umbrella. And then also what was kind of interesting when I looked at their homepage, you can go through the years and see that they started back in the 1800s. The Nestle company history begins in 1866 with the foundation of the Anglo-Swiss Condensed Milk Company. Henry Nestle develops a breakthrough baby food in 1867, and in 1905 his company merges with Anglo-Swiss to form what we know as Nestle Group. So I believe that the Swiss Miss, cocoa, is also under the Nestle brand as well. So again, you might know their cocoa falls under Nestle. So they have a very diverse portfolio, a lot of brands that you may not realize. Like I said, baby food probably doesn't jump out as a Nestle brand, but they do have their hands in a lot of different cereals as well, a lot of different brands underneath their umbrella in the consumer staple sector. And again, you can go through the years, and this is a foreign company, so we're not going to get quite as much information here with them being a Swiss company. They're out of Switzerland. That is their where their main office is, or where they started out of. I think they have headquarters all over the world now. And the reason we are taking a look at them, down 0.74% on the day. Not a big drop, but down nonetheless. So I thought we'd take a look at them. We are talking about Nestle, ticker NSRGY. Again, a company out of Switzerland here, foreign company out of the consumer staple sector. 52-week range as low as $99.04, as high as $125.41. So at $109.14, they are within 15% of their 52-week low. Right around $113 per share would be where they'd sit there at 15% of their 52-week low. Now, market cap of $285.947 billion, a beta of 0.29. So even though you can see a bit of volatility throughout today, they are typically much less volatile than the overall market. PE ratio, now for me, this is a little high at $23.27. That's a little bit, I think it might be right in line with the market or a little bit higher than the market. I think the market's right around 22, 23, 21, right in there. The market overall is a little elevated. I like to see companies, especially one as old and built out as Nestle is. I don't know, you'd have to look at their growth here, but I don't know that they're growing fast enough to justify a PE in the 20s. I like the teens or lower, really, for a company like this. 15, 14, 13, right in there would be more in line with what I'm looking for. You could look at their forward P and see what that is. Maybe it's a little lower, but not so much outside the overall market. Like I said, a lot of companies are elevated right now. The overall market's elevated, so it's not terrible. EPS, earnings per share, sitting at $4.69 per share. Earnings date coming up in July 25th. So tune in July if you're interested in that. Forward dividend is $3.28 per share. Now they are an annual payer, so they only pay one time per year. You'll see that here whenever we look at their dividend history. Nice starting dividend yield currently at 2.98%. So we're going to take a look at their dividend yield theory. Oh, I'm sorry. Let's finish this up. Ex-dividend date April 22nd. Looks like we're well past that, and it looks like they are going to pay out on June 8th. So kudos to those of you out there who have been holding this since their ex-dividend date and will receive that dividend here in a couple days later this week. Now they have a one-year target estimate here from Yahoo Finance of $130.58 per share. So they see it setting a new 52-week low here, or I'm sorry, a new 52-week high, not a 52-week low, a new 52-week high from 125 up to 130. So they definitely see some upside as far as the stock price over the next calendar year. Let's jump over and look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 2.53%. We compare it to their current 2.98, same number. I know that this says forward, but it's the same number, 2.98%. And since it is higher, that speaks to undervaluation, at least according to dividend yield theory. Now, payout ratio is under the 75% I look for. I like 75% or lower, sitting at 70.28%. Now we're going to jump down and look at free cash flow. As a dividend growth investor, I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with it. They can pay down debt, they can make acquisitions, they can further build out their company, building new plants or repurposing plants or doing maintenance, that sort of thing. They can also buy back shares, and they can continue to increase their dividend, which is what I want as a dividend growth investor. Going back to 2020 here, you can see $10 billion in free cash flow. A bit of a drop in 2021, down to 8.5. 2022, a bit more of a drop, down to 2022. Now in 2023, it looks like they've recovered a little bit. Overall, it is not increasing from 2022 to 2023, but it is not up from 2020 here. Repayment of debt, you'd want to compare that to the issuance of debt to see if they are indeed paying down their debt or if they're taking on more than they're paying down. Negative 3.5, negative 3. They're consistently paying down debt is what it looks like. But I would like a little more growth in their free cash flow. Again, from last year in 2022 to 2023, if they were to hit 2024 with growing free cash flow, that would give them growing free cash flow over the last 3 years, but not quite the 4 years, 5 years that we're looking for. And it's not terrible. I mean, 10 billion to 9.7, you almost flat. Really, they're up a little bit in the repayment of debt, so could account for some of that drop from 10 billion down to 9.7. You could call it flat, but it's not growing. Now, unfortunately, stockanalysis.com did not have a forecast on this one. They must not have enough people taking a look at it, or because it's a foreign company, they just don't do it. So I do not have anything to cover there. But we're able to pull their return on equity and return on invested capital. I like 10% or better here. Return on equity for Nestle is sitting at 31.63%. Very high, very good number here. Return on invested capital sitting at 14.28. Again, above the 10% I'm looking for. EPS growth, I like 5% or better. They're sitting at 9.43%, so very good there. And revenue growth forecasted at 4.02. Now, this is what I'm talking about whenever I say their price to earnings Now, if their revenue and their earnings growth was in the double digits, maybe a 23 or 24, PE makes sense. But with it being only 4% forecasted over the next 5 years, that's not a lot. So that's why I'm questioning their price to earnings. But that doesn't necessarily mean that they're overvalued either. And you'd want to look at their forward price to earnings, not just their current one, because like I said, their forward could be a little lower. So overall, numbers look pretty good. Within 15% of a 52-week low, return on equity looks good, return on invested capital, EPS growth, almost double digits. All the numbers look pretty good. Let's look at their dividend history here. So annual dividend, again, they only pay out once a year. Not terrible. I have some other companies that only pay out once a year. It's not a showstopper or a deal breaker. Payout ratio here, they're saying 72.16%, still under the 75% I'm looking for, though it is getting up there. Yahoo Finance had it at 70%, so still under the 75% I'm looking for. You could split the difference, 71% if you wanted. Dividend growth, nice dividend growth, 6.97%. Very solid dividend growth there with a almost 3% starting dividend yield. That's nice. Now they are saying growth years only one. That is not the case. You can go here and look back at 2015. See, it was at $2.31. Did drop a little bit, 216, and some of this up and down might be because of exchange rates, but did drop a bit in 16, but 17 back up to 230. 2018, 252. 2019 looks like it dropped down to 242, but right back in 2020 up to 2.75. 2021, $3.66. $3.06 in a fraction of a penny, $3.04 in a fraction of a penny in 2021, $3.18 in 2023, $3.40 in 2024. So it's at least been growing since 2022, 2023, 24 for the last 3 years. And again, they do pay out once a year. Looks like pay date, they're saying May 31st, but I thought it showed June 8th on the previous one. Maybe they just haven't updated that yet. May 31st looks like what they're going to pay out here coming up, not the June 8th. That must have been last year. They must still have last year's. They haven't updated it. That's what it looks like. They still have June 8th listed. That was the 2023 payment. So according to this, they're going to pay out on May 31st, and they're going to pay out $3.40, and then this fraction of a penny. You'll get $3.40 per share. Dividend yield buyback yield 2.25%, shareholder yield 5.38%. Again, very good numbers on Nestle. It does look attractive right now. Might be worth a deeper dive into their financials. How's their revenue growing? How are their margins look? Are they growing over time? Again, look to see if they're paying down debt compared to taking on debt. Are there assets over liabilities? Do they have more assets than liabilities? There's other things you want to get into and look at their balance sheet and their income statement there. And maybe compare them to, like I said, like a Hershey's company or some other ones and see how their numbers look compared to that. But Nestle looks attractive right now. Might be worth a look. But let's jump back over and look at the vested interest stock screener. So we started with understanding the business. Again, they're out of the consumer staple sector. You're probably aware of some of their stuff, Swiss Miss, their cocoa mix, the Nestle candy bars. They have their hands in a lot of other companies or a lot of other products out there. Baby food. I wasn't aware of the baby food one. Cereal, a lot of other ones in the consumer staple sector. Growing dividend. Yep, we saw a growing dividend. Dividend payout ratio of 75% or less. They're at 72% right in there, so under 75%, so that's good, though they are getting up there. Anything above 75%, you got to start worrying if the dividend is safe. So if they run into any trouble, it doesn't give them much of a margin of error. They only have about 25% left to pay down debt, make acquisitions, reinvest back into the company. So again, that's why I use 75% or less. And if you don't like that, some people like 60% or less, you can adjust these numbers and tweak this screener to what you want it to be. Check valuation based on dividend yield theory. According to dividend yield theory, this one is potentially undervalued. It doesn't have much of a margin for safety. I would like a bit more of a margin for safety, but it is potentially undervalued. Buy below current cost basis or within 15% of a 52-week low. It's not in my portfolio, so it wouldn't be below my current cost basis because I don't own any, but it is within 15% of a 52-week low. $113 would be within 15% of that 52-week low of 109, I believe it was. Return on invested capital, return on equity was greater than 10% for both, and earnings per share growth was greater than 5%. We did not look at price to book. So overall, 1, 2, 3, 4, 5, 6, 7 of 8 would definitely put this one on my screener. And to be honest with you, I might actually throw this one on my screener. I don't own anything in Switzerland. I do like the Swiss. And I do like Nestle candy bars, and I like a lot of their products. When I looked on their homepage, like I said, I was familiar with a lot more of their products, but just didn't realize they were Nestle products than I realized. So might be worth checking them out. and adding them to your watch list and doing more of a deep dive into their financials on this one. Well, that is it. As always, appreciate you stopping by, and thank you for the suggestion. Really do appreciate the suggestions. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Nestle. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like Nestle you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great day, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and invest your for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount of comes. Always do your own research. Investing based on your situation, circumstances, and select criteria, or seek the advice counselor, certified financial advisor.